Morning, and welcome to the pre-opening edition of Storm Stock Solutions. I'm Grant Mercer. Let's bring some clarity to the chaos as we head into the Friday bell. Futures are leaning cautiously constructive into what some traders are calling the holiday breakout window. According to commentary highlighted by MarkWatch, there's a growing view that positive seasonality could carry the major indices toward fresh highs into year-end. And interestingly, that same risk-on tone has been spilling over into gold and silver as well. So the backdrop into the open: modestly bullish sentiment, but plenty of stock-specific stories driving the action. Let's start with the big overnight drivers. The headline in tech is Meta. Reporting from MarketWatch says Mark Zuckerberg is moving to slash the metaverse budget by as much as 30%, targeting what he himself has described as a black hole of spending. Markets tend to reward discipline, and investors have been nervous about AI and metaverse dollars ballooning. So this shift is being read as Meta refocusing on cash-generating core businesses and more measured AI investment. That's why you're seeing a sharp pop in the stock, and why traders will be watching whether that move has follow-through off the open and potentially lifts the broader mega-cap complex. Staying in big-cap tech, there's fresh analysis on Microsoft's relationship with OpenAI. As MarketWatch reports, one analyst is framing that partnership as a kind of safety net for the stock. Microsoft keeps the upside from AI integration in Azure and its software stack, while a lot of the headline and governance risk sits outside fee core business. For professionals, that reinforces the idea that Microsoft remains one of the more defensible AI leaders on the board, and that could matter if we do get a year-end chase into quality growth. On the macro side, one deeper theme to keep on your radar is affordability. A piece highlighted by MarketWatch digs into the unaffordability 5: housing, food, healthcare, childcare, and energy, and argues those costs were rising long before the last tariff cycle. Why does that matter for today's take? Because it feeds into how strong the consumer really is beneath the surface, which sectors can still push pricing power, and where political and policy risk could flare up in 2026. It's not a data print that moves futures in a single tick, but it's the kind of underlying story that shapes how investors think about staples, healthcare, and even real estate over time. Now, in terms of areas showing strength into the open, traders are locked in on that seasonality trade. The MarketWatch piece on a potential holiday breakout notes that if the usual year-end pattern kicks in, equities could grind toward all-time highs with metals like gold and silver tagging along. When you see stocks and traditional safe havens rally together, that often speaks to abundant liquidity and positioning more than simple fear or greed. For short-term traders, that can mean watching the breakouts in broad index levels alongside volume in gold and silver ETFs as a confirmation or a warning sign. Within single names, Meta is obviously the star on the upside, with that budget cut story putting a spotlight on AI leaders that are also tightening the belt. Traders will be asking, do other large-cap tech companies start talking more aggressively about return on AI spend rather than just size of AI spend? That narrative pivot can move entire baskets. On the flip side, one clear weak spot to handle with care this morning is SoFi. According to reporting from MarkWatch, shares dropped more than 6% in after-hours trading after the company announced a $1.5 billion stock offering. Equity raises from high flyers often spark the same questions. Why now? What's the use of proceeds? And how much dilution are existing shareholders swallowing? For the broader fintech space, this can also be a reality check on funding costs and growth at any price strategies. Expect SoFi to be volatile off the open and to act as a sentiment signal for the rest of the online lender and neobank crowd. You're also seeing some signs of fatigue in parts of the consumer complex. MarketWatch notes that Costco's U.S. sales are still growing, but at a slower pace, and the stock has slipped into the red for the year. Decelerating comps, even from a high base, are exactly the kind of thing long-only managers scrutinize in December when they're deciding what to keep, what to trim, and what still deserves a premium multiple. It doesn't mean the story is broken, but it does point to big box retail as an area to watch for disappointment risk if the consumer softens further. Let's turn to a few under-the-radar stories that could matter more as the day unfolds. In semiconductors, TD Cowen analysts, via MarketWatch, are highlighting Applied Materials as a top pick that isn't flashy, but could benefit from unprecedented momentum in both DRAM and leading-edge foundry cycles. That's the kind of note that doesn't necessarily explode a stock in one session, but it reinforces the idea that the semicap equipment names are leveraged to the next leg of AI infrastructure and memory demand. Applied Materials sits firmly on that watch list of chip names that could quietly become leadership if the sector continues to trend. In consumer discretionary, Ulta is getting attention after MarketWatch pointed out that beauty products, especially the so-called mastige category, where mass and prestige meet, remain one thing people are still buying even as they cut costs elsewhere. That has implications not just for Ulta, but for broader beauty, skincare, and personal care plays. It's a reminder that even when the affordability narrative is heavy, consumers often protect small indulgences, and that can carve out pockets of resilience. And over in media and streaming, the latest twist is this competitive bidding for Warner Bros. Discovery. MarketWatch reports that Paramount Skydance Group now believes Netflix is winning that auction and has complained about the process. No deal is done yet, but for traders, this is a live-fire exercise in consolidation risk and opportunity across the streaming landscape. Names involved in the bid and their rivals go on the background watch list, because one headline can change relative power dynamics in that space very quickly. So as we head toward the opening bell, here's the setup. Watch the tug-of-war between year-end breakout optimism and stock-specific landmines like Sofa's offering. Keep an eye on whether Meta spending pivot sparks a mini-rotation inside big tech. And don't ignore those quieter undercurrents in chips, beauty, and streaming that could build into bigger stories next week. I'll be back with intraday updates once the market gets moving to see which of these themes actually take control of the tape. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer. Stay sharp, stay steady.